Tether, the company behind the largest stablecoin by market cap, USDT, made a total net profit of $6.2 billion last year. Of this amount, approximately $4 billion was derived from investments in US Treasuries, money market funds, and reverse repurchase agreements. Tether's CEO highlighted this success with transparency.
It's now publicly reported that Tether made basically $6 billion in profits last year. And we kept the vast majority of these profits within the stablecoin reserves.
Stablecoins were truly the first tokenized assets that gained widespread acceptance. The concept was simple and easy for people to understand, a digital token that is backed one-to-one by a stable asset like the US dollar. This allowed users to stay within the cryptocurrency ecosystem without experiencing the extreme volatility that is often associated with digital currencies like Bitcoin and Ethereum. By pegging their value to stable assets, stablecoins provided a safe haven for investors and traders during market fluctuations. They bridged the gap between traditional finance and the crypto world, making it easier for people to transact, save, and invest without the fear of losing value overnight. As the concept of stablecoins matured, the next logical step was to tokenize other stable financial instruments. Tokenizing T-bills, cash, and repurchase agreements, commonly known as repos, was a clear evolution. One of the most exciting developments in this space is BlackRock's BUIDL Fund, which stands for BlackRock's Tokenized United States Dollar Institutional Digital Liquidity Fund. Larry Fink, CEO of BlackRock, is putting his vision into reality. Let's hear what he thinks about tokenizing financial assets.
I believe the next generation for markets, the next generation for securities will be tokenization of securities. Think about instantaneous settlement, bonds and stocks. No middlemen. We're going to bring down fees even more dramatically.
BlackRock's BUIDL fund invests in short-term instruments like T-bills, repos, and commercial paper. It allows only institutional investors to purchase and appeals especially to crypto startups or companies that hold a lot of funds in crypto, such as stablecoins, decentralized autonomous organizations, DAOs, and treasuries for crypto games and other startups.
And Carlos, who do you see this as being for? Of course, you've raised, I believe, $280 million since the debut, so clearly it's for someone. But do you see it as more for the crypto audience, people who are invested in crypto, or do you think that is more for traditional finance coming into crypto?
This particular product with BlackRock is geared towards the crypto institutions that want to have a cash management product native on-chain, tokenized for either treasury management or for building derivative products or collateral management, etc. So this particular product is really for the crypto institutions to have a better management of cash, obviously managed by the largest asset manager in the world and completely on-chain.
Purchasing BUIDL ERC20 tokens provides significant benefits. Investors can earn yields on their holdings, unlike on traditional stablecoins, with an essentially risk-free return from highly stable assets. The BUIDL fund pays dividends at the end of each month in the form of an airdrop of additional BUIDL tokens. Each BUIDL token is valued at $1, and holders receive extra tokens proportional to the gains earned from the fund manager. Furthermore, institutional investors can exit the fund by exchanging those tokens for stablecoins.
So the tokenized fund with BlackRock is essentially a money market fund, and it has short-term treasuries and repurchase agreements. And then you get a token at the beginning when you purchase a unit on the fund. The token is valued at $1, and then as you accrue interest, we basically will send you to your wallet, which is essentially your address on the blockchain that contains your assets. We will send you more tokens, so you increment the number of tokens that you have there. And then eventually you can redeem back into cash if you wanted to then exit the fund and get cash.
For stablecoin providers like Tether, the BUIDL fund offers several advantages. Companies can provide attestation directly on-chain, eliminating the need for third-party auditing firms. Operational efficiencies via tokenization are already clear, as whitelisted wallets, or approved institutional investors, can interact directly with each other. Smart contracts ensure that funds can only be transferred to these approved wallets, optimizing processes and enhancing security. The BUIDL fund exemplifies the potential of tokenization on the Ethereum blockchain. As more assets and financial instruments become tokenized, we can expect increased efficiency, transparency, and accessibility in the financial markets. The future of finance is digital, and tokenization is leading the way. If you found this video informative, please like, subscribe, and hit the notification bell to stay updated with the latest developments in the world of blockchain.